Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra, and with me is Hormaz Patakia. Hormaz, some more decline is what we are seeing in the markets right now. The midcaps, though, they continue to outperform.
They are continuing to outperform, and slight bit of losses being extended. The mid-cap index is still in the green, and that's possibly the only saving grace. We need a lot to cover ground on over the next 30 minutes. So these are the top headlines at 1:30 this afternoon. Stocks are taking a breather after a strong performance in the week gone by. Realty, metals and FMCG are the big drags, even as PSU banks are the outperformers. The mid-cap index too is holding on to gains.
Shares of Karnataka Bank fall over 5% after lender's managing director and CEO Harihar Sharma, along with executive director Shekhar Rao, both quit, citing personal reasons.
Alembic Pharma shares are up over 13% after securing a US FDA approval for a drug that can be used in the treatment of ovarian cancer and other such disorders.
Hind rectifiers gains after bagging orders worth 220 crore rupees from Indian Railways. The stock is up over 2%. Okay, those are the top headlines. We'll discuss them in greater detail through the course of the show. For the markets right now, as we were pointing out, Nifty has extended those losses. There was a wee bit of recovery at around 11:30, but that has been sold into almost near the day's low. So it's a 125 point cut that we are looking at. The Bank Nifty down 0.1%. We have Sensex too, which is down around 0.5%. What has led to this fall from the highs? Something like a Kotak Mahindra Bank. There's Reliance as well, which is at the day's low. That's, of course, all about the large caps. And on this show, we usually speak about the mid caps because that continues to do well. It is in the green, that particular index today. So this is our segment, Mid Cap Movers. Hormaz is now joining us at the wall. Tell us about the mid caps that are moving around in trade, Hormaz.
Some saving grace. The mid cap index still holding on to some of the gains, but considering the fact that the screen is predominantly red, we'll start off with the losers then within the broader markets. And there are plenty of them. You look at Narayana Health, until last week was making new highs. So some profit booking coming in at higher levels. JK Cement, Home First Finance too at the lows of the day. Losses of anywhere between 4 to 5%. The newsmakers too predominantly have seen a negative reaction this afternoon. JB Chemicals after the deal is down 6.5%. Karnataka Bank after the top brass quitting down 5.5%. Slight recovery from the lows. Jyoti CNC of course after the block deal. Alembic Pharma at one point was up 13%. Still holding on to gains of around 9%. PSU banks are the outperformers today, and every single stock in the PSU Bank Index trades with gains anywhere between 3 to 4% among the top movers like Bank of Maharashtra and PNB. Some stocks that are doing well on the volumes front, and there are some other names that are bucking the trend. Look at Aavas Financiers is up 6%. Raymond Lifestyles is up 14.5% as we speak, and SKF India too trading with gains of around 4% this afternoon. And lastly, a pocket that has also done well today despite the struggles that the index is facing are the capital market names. Look at CDSL at the highs of the day, Aditya Birla Sun Life AMC also at the highs of the day, and as is Motilal Oswal, gains of anywhere between 3 to 6%, Zonal.
Okay, all right. So that's what's happening with the mid-cap space. But it's a good time to get a technical check on the markets. Let's welcome Ruchit Jain from Motilal Oswal Financial Services for just that. Ruchit, good afternoon. Thank you so much for joining in. This cut has come in after a stellar rally that we have seen as well. But do you think there could be further pressure from the levels?
Yeah, very good afternoon, Sonal. Very good afternoon, Hormaz. It just seems to be a corrective phase within an uptrend because we have not seen that broader markets or the market breadth getting deteriorated in today's down move. You can see the advance decline still in favor of the advances in spite of Nifty down by about 120-25 points. So, since last few trading sessions, we have already seen a run-up. There could be some cool-off, but does not worry much on the broader market fronts. I think on the pullback moves, any dip towards 25,400, 25,350 should get bought into. So it remains a buy on dip, and this is just a corrective dip within an uptrend, it seems.
And what would your individual technical picks be, Ruchit?
Yeah, so a couple of recommendations on the long side. One is from the PSU banking space. Certainly, if you look at the Nifty PSU Bank Index, and it is on the verge of a breakout from its recent consolidation phase, within which the leadership clearly can be seen from the large cap stock SBI. So SBI, where we have seen a good amount of consolidation over last few months, is on the verge of a breakout. Today's up move supported by good volumes is the initial signs of that. So short-term traders can go long in SBI with stop below 800 for potential targets around 855. And we are quite positive on healthcare space as a whole since last few weeks, within which Apollo Hospitals technically looks quite positive. We have already seen a corrective phase in the stock. The price of moves are getting supported by good volumes now, whereas in between corrections which are there, we are not witnessing any volume-based selling happening over there. So for a positional perspective, one can go long on Apollo Hospitals as well, with stop loss below 7,000 for potential targets around 7,600.
Two large cap recommendations from Ruchit. Thank you for joining in with your views on the index and on specific stock ideas as well. Take a short break here on Midcap Radar, but remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 this evening. Take a short break. Back on the other side. Welcome back, and still 130 points lower on the index as we speak. Almost a 500-point cut now on the Sensex. But of course, Raymond Lifestyles is the one that is continuing to move higher, as we just highlighted a few minutes ago, 13.5% higher on the stock. And not just that, even the parent company Raymond is doing fairly well for itself, 12% higher on that stock as well. So keep the Raymond Group stocks on your radar. Of course, Raymond Realty will be listing tomorrow, so we will keep that in mind as well. Of course, some of the other movers on the downside, though, SBI Cards is one of them, 3% lower on that stock. BLS International, that too is trading with cuts of around 2.5%. And some of the other movers, then Go Digit is down 2%, as is Devyani International. So predominantly a stock-specific move that you're seeing within the broader market, Sonal, although the index continues to move in a narrow range.
That's been the case, right? So that's a very stock-specific market today. At the headline level, of course, we are seeing some pressure. But one space that has been in focus, and that's been the fertilizer segment. Reports have suggested that China has halted specialty fertilizers export to India. So we'll discuss that in greater detail with an analyst in just a bit. But as I've been pointing out, it's a stock-specific market, and you are looking out for, Minda, Hormaz.
Positive initiation that is coming from CLSA on Uno Minda, and the stock has done fairly well over the last month or so. It's up around 10-12% over the last month, although not doing much today. But initiation with an outperform recommendation, a price target of 1,300 rupees, and they are saying that even in a market like this, it is shown very limited cyclicality when it comes to the auto ancillary space. That is because of the diversified product and customer base that the company has. Now they are expecting Uno Minda's margins to see a recovery, and that is because of an overall revival that the industry has seen, the expansion that it is taking place, the scale that it is going higher, premiumization coming into play, and a product mix that is getting better, which could aid margins for Uno Minda going forward. And as a result of which, they are expecting the earnings for the company to double or nearly double over the next 3 years, that is by FY28. And they are seeing Uno Minda as a high growth compounding play with a lean balance sheet, and they are not factoring in that their free cash flow that they are generating, that will be reinvested back for further M&A activity, and that, according to them, is an upside risk, is what CLSA has said. So a positive note coming in on Uno Minda, a 1,300 rupee price target, so a fairly decent upside even from current levels.
Yes, but the stock refuses to take note of that particular note, so we'll watch out for that one. But it's time to slip into a break. When we do that, here's some good news for our viewers. India's business news leaders now click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're still tuned into Midcap Radar. Let's shift focus to the fertilizer segment now. We were talking about reports suggesting that China has halted specialty fertilizer exports to India. In fact, the report suggested that no shipments have been cleared for over 2 months, despite there not being an official export ban. Prashant Biyani, who is the Vice President of Institutional Equity at Elara Securities, joins us now to discuss more. Prashant, good afternoon. Thank you so much for joining in. First, if you can explain the difference between these specialty fertilizers versus the generic ones, if they are being used at a high volumes in the industry as well, and how has this move impacted the industry so far?
So specialty fertilizers are different than bulk fertilizers. Specialty fertilizers are used in friction of quantity in compared to the quantum in which bulk fertilizers are being consumed. So that way, these are not major fertilizer as far as fertilizer imports are concerned. These fertilizers are primarily used to increase the yields of the crops. So that way, this is the difference between bulk and specialty fertilizers. Most of the listed companies in the space are primarily dealing in bulk fertilizers like urea and some phosphatic micronutrients, and these specialty fertilizers are very minuscule as far as the overall percentage of top line is concerned.
Prashant, good afternoon. Thank you for joining in. So, if at all there is an impact of this move on Indian listed companies, you mentioned that they trade mainly in bulk fertilizers more than the specialty ones. But for those who do have a minuscule exposure, do you see an impact, or there are alternative sources from where they can offset any potential loss that comes in from this move from China?
See, part of the impact was already there on the day when this news came. Fertilizer stocks were down on that day, and there are several sources from where you can have these fertilizers. Fertilizers in general, globally, Middle East, North Africa are also major markets. Not only China. So North Africa, Middle East, and Russia are markets where we can have our supplies from. It is just the fact that pricing from here on for these fertilizers can be a bit higher. But till the time we have availability of them, I don't see a major challenge. In case there is a question of availability as well, then for some category of fertilizers, some category of specialty fertilizers, even nano fertilizer can be used to some extent to compensate for the yield.
Okay.
So I don't see a major impact of that China stopping these fertilizers will have on the Indian companies.
Okay, that is good to know. Just on the bulk fertilizer bit, Prashant, we do import other raw materials as well for even bulk fertilizers. I assume ammonia, and there are other raw materials as well. Has there been any impact on the supply chain because of the global geopolitical crisis that we've been seeing, or all is good for the industry right now?
No, supply chain concerns have been there, and that has led to increase in price. So sulfur prices have gone up to around $300 versus $100 in October last year. And the same we have seen in phosphatic fertilizers as well. For example, DAP prices, I think right now are between $700 to $740, which used to be around $520 to $540 a quarter back. So phosphatic fertilizer space has seen a bit of price increase because of all this, but availability is not a challenge as of now. This last leg of increase in phosphatic price has been happening because of export ban from China of DAP as well. So the bans from China is not questioning the availability, but it is giving a reason for the suppliers to jack up the price.
What about this quarter, Prashant? How is this sector likely to do in the quarter that will be reporting results in just a few days from now? So which are some of the names that are likely to do well, some of them that are not likely to do well? What's your order of preference here within this sector?
See, structurally, I think within the fertilizer space, we like phosphatic fertilizer universe, which is Coromandel and Paradeep phosphates. Both of them offer a very good opportunity in terms of import replacement of fertilizers is concerned. Both of them are expanding capacity, not only in finished product, but backward integration space as well. So both these stocks we like from a structural view. Of late, we have seen a good run up in the stock price. So in the near term, we are not expecting anything significant from these stocks. And as far as the quarter is concerned, we expect them to report mid-single to high single-digit top-line growth. But because of a good backward integration benefit, I think EBITDA growth should be much better from these companies.
Got it. Prashant, last question before we let you go. Which are the top picks and what's the rating on them?
So we have a rating. We used to have a rating of accumulate on Coromandel, but now I think after the recent run-up, we will revisit our rating around the results time. But structurally, we like both these stocks, as I mentioned. Both these stocks offer very good earning potential, and from a returns perspective, also over the next 3 to 5 years, as both these companies are aggressively expanding capacity across all segments.
All right, Prashant, thank you for sparing time and joining us today with your views on this move that has come in on the specialty fertilizer curbs that China has implemented. We're talking about Zydus Wellness now. We spoke to the management just a few minutes earlier on the road ahead for their business, and they said that they are hopeful to make up for the lost sales in the first quarter over the next 3. Listening to excerpts of that conversation.
I think this summer's been brutal for anyone who has a summer business, and we have not one but 2 brands, both Glucon-D and Isel, which rely heavily on this. So it's actually gone worse, and typically in between rain, you're prepared and you do expect some bit of surprises, but there it has been a continuous rain throughout the quarter, throughout the last few months. So obviously it has impacted a lot of our momentum in these 2 brands. We hope that the remaining 3 quarters will hold us in good stead and help us catch up on the numbers that we wish to do. Rural has been 3 to 4%, as reported by all syndicated data, been growing faster than the urban. Of course, urban gets compensated because when I look at sources like Nielsen, they do not cover the quick commerce, so it gets compensated. But from a consistency and a general trade point of view, rural has been always leading. Even our distribution is substantially, disproportionate to the share of sales. So 25% kind of sales coming from revenue coming from rural, but almost 50-50 share between equivalent presence in our distribution for rural and urban. Clearly, M&A has been part of the strategy at Zydus Group and Zydus Wellness itself. It allows us to one-side scale, which is what Heinz deal did, but also play in spaces that we want to, which is food and nutrition on one side and skincare on the other side. We do believe there are spaces where we can build further and add to the our portfolio in the right direction.
All right, that's the word coming in from Zydus Wellness, but it's time to talk about the mega pharma deal between Torrent Pharma and JB Chemicals and Pharma. What are the contours of the deal? How will the deal impact the business of both? And what are the brokerages making of the deal? Ekta is standing by the wall to tell us all this and more. Over to you, Ekta.
Well, yes, Torrent Pharma has announced a 2-phase acquisition of JB Chemicals from KKR, marking one of the largest deals in India's branded pharma space since possibly the Ranbaxy-Sun merger. Torrent will first acquire 46.39% stake for around 11,917 crores and may pick up an additional 2.8% from JB Chemical employees at around 1,600 rupees per share. An open offer for 26% follows at around 1,639 rupees per share, with the total size of the acquisition for Torrent possibly going up to as much as 19,480 odd crores. Now, in the second phase, the companies will merge, with JB shareholders receiving 51 Torrent shares for every 100 held. Now, the deal values JB Chemicals at around 25,689 crores and 11% discount to its closing price ahead of the deal. With the JB Chemicals acquisition, Torrent Pharma is now poised to rise from the 6th to the 4th largest pharma company in India. The deal, in fact, is expected to boost its domestic revenues by 35%, surpassing 8,600 crores based on FY25 numbers. Torrent will strengthen its dominance in cardiac and gastro segments, gaining top brands like cardiac drug Cilacar with sales of 785 crores and gastro drug Metrogyl at around 342 crores in terms of a size of a drug. It also secures entry into ophthalmology and expands its footprint in the global CDMO space. Torrent Pharma may in fact fund the JB Chemicals acquisition through a mix of internal accruals, debt and equity via QIP. It could take on as much as 10,000 to 12,500 crores of debt, pushing the combined net debt to around 14,500 crores and a net debt to EBITDA to around 3 times on an FY25 basis, according to analysts. However, analysts including DAM Capital are not overly concerned. They point to Torrent's steady free cash flows and believe a 2 times EV to EBITDA leverage is reasonable and the debt could be paid down in 3 to 4 years. Now, while JB Chemicals currently operates at a lower EBITDA margin than Torrent Pharma, analysts are not overly concerned about that either. Torrent has had a strong track record of cost rationalization as seen in its past acquisitions of Elder, Unichem and Curatio, which saw margin expansions within 1 to 2 years. While we could see near-term dilution, analysts believe the combined entity could target EBITDA margins of 34 to 35% over the next 3 to 4 years. Lastly, what are the brokerages saying? IIFL recommends JB shareholders should avoid tendering in the open offer and wait to swap their shares in the merger. Nomura expects the adjusted EPS accretion in the mid-single to low double digits. They maintain a neutral rating with a target price of 3580. HSBC expects the deal to be 3% accretive to FY27 estimated EPS estimates. They retain a buy with a target price of 3,775.
Thanks a lot for that, Ekta. We take your leave on this edition of Midcap Radar. Just as we do that, the Nifty has now slipped below the mark of 25,500, 150 points down now on the index. The Sensex too down 550 points. Among the top losers on the index that are the big drags in today's session, Tata Consumer is one of them, Kotak Mahindra Bank is the other, and the auto names, Hero MotoCorp, Maruti Suzuki and the likes are also proving to be a drag on the index. And of course, HDFC and ICICI Bank too, the index heavyweights, as is Reliance Industries, contributing to the downside. We take a leave on this edition of Midcap Radar. From Zonal, me and the team that put this show together. Thank you so much for watching. Your stocks on the other side.